Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, March 6, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Another thrashing for the market today. She came into, spiked through, but closed above the 200 period moving average on the daily chart. There was another very significant number hit today in the market. We'll get to that later. What we do want to bring to the forefront, and I had this discussion with the live room folks this morning, is the market is on a collision course. You'll want to know it's on a collision course to what? That's a great question. We'll also get back to that in a moment. Let's just get the picture from the weekly chart perspective, the larger picture perspective, clearing up at least some of the daily chart noise. She's headed into the 50-week moving average. That's a pretty strong moving average. We would expect the market to find some stability in and around the 50-week moving average. Yes, intra-week, she can spike it through. She can come up short. Either way, the area around the 50-week moving average is uber important. I have two numbers, not one, but two numbers in and around the 50-week moving average. Would you like those numbers? I would get out your sticky notepad and write these numbers down. The first one is 564.20. The next one down is 560.47. The above number represents coming up just shy of the 50-week moving average. However, by the time price gets there, maybe next week, that might also coincide with that moving average. The one below represents a spike through the 50-week moving average. These also represent an area, which is what's called a former breakout area. Those of you that have taken my class, MSF Masterclass, Lazy E-mini Trader, been listening to me in the live trading room, been watching these videos at night for years. Those of you that have been around a while will know one of my favorite things happens to be the most recent breakout area. Now you can find several breakout areas on the chart. I zero in, creating what's called a full stack situation. Let's look at it this way. Market ran up to this spot, whether you want to go here or here. We're splitting hairs over pennies. Whether it's 565 or 564.20, doesn't really matter. It's the concept. The market couldn't get all the way through. She struggled to get through, whether you want to put this arrow here with a legitimate pullback, tried again, pullback, tried again, gets above, then now coming back to retest the most recent breakout area. Write that down, put it on a sticky note. That was item number 2 of 2. We still haven't gone over one yet, which is, what is the market on a collision course for? Keep out your sticky notes. Keep your pen handy. There's an event, I like to call them tinfoil hat events, late next week. On March 14th, we have what's called a blood moon. That's number 1. The second thing coinciding with the blood moon on the 14th is a total lunar eclipse. Now, I obviously am a little bit bonkers, as they say in the trading parlance. I get that. You don't have to believe in this stuff. But what we've discussed before many, many times in these videos is markets like to trade either down or up into these events, and not every time, but many times will turn after these events. Not necessarily the minute after, not even the day after, but we would deem it we're looking for a turn. So if in fact the market continues to trend down into next Friday's time frame, we're going to be looking for a turn. Doesn't mean it has to be down each and every day into next Friday. Just trending down by and large into next Friday, we're looking for a turn. What happens if it trades up for the next several days into next Friday? We would still be looking for a turn. Write this stuff down, put it on a sticky note. It's important information. If you don't believe in it, discard it. If you want to look at me like I have three heads, that's totally fine. Most people do. About inside the numbers, I'm here to tell you this. Today was what was called a bonanza day in the live trading room. Traders made thousands and thousands and thousands of dollars in literally no time this morning in the live trading room. Let's get right down to the business of the numbers and see what happened. We have several numbers that should become more clear as we review them. 575.90 is important and has bear pivot qualities. 575.90. Right of the vertical is today's activity. Here's an SPY 5-minute chart. You can see 575.90, horizontal line, bear pivot qualities. What does that mean? That means below that number, the market, Mrs. Market, is bearish. Above that number, and the door opens to the next number, which we're calling the bull pivot. We had two, not one, but two pivots today. We'll get there, just hold on. Below the bear pivot on candle closes opens the door toward the recent lows and the next number down in the sequence, check this out, 571.20. Now, traders in the live room, traders in here, we've discussed it. They'll know that I've been eyeballing this number for days and days and days. And when that happens, you want to heed those numbers. Those are numbers that are tradable opportunity. 571.20. 571.20. Now, here's exactly what happened today. Some of you can relate to this. Finished up the live room, shut it down, a little after 11 o'clock in the morning, went to eat some lunch. Wasn't really watching the market, had no idea what was going on while I was eating lunch. Waltzed back to the office to check out where the market was, sat down at my desk, and noticed the market was approaching, ING in italics, approaching 571.20. It was about $1 away at the time. I sat down, loaded up the orders, which I don't trade a lot in the afternoon. Folks in the live room know that, but I couldn't resist that number, and I know several of you did the same thing. And it may not look like much on this 5-minute chart, but when you say, hey, did you buy 571.20? The answer is yes. Where did they trade up to? Here was a high of 574.16. That's 30 S&P handles in just a matter of minutes. Yes, money was made at that number by many traders from the live room, inside the numbers, and yours truly. But wait, there's more. Let's scroll up, see what we have as the day starts to get underway. Just about 9 o'clock, 8:55. What's the scoop today? We're making an executive decision and going with a bull and a bear pivot. So now we have 575.90 and the bull pivot is 578.70. That comes into play quite interestingly. That becomes a target above the bear pivot. As long as she gets above the bear pivot, 575.90, she trades up to 578.70. This was all laid out in the live room in real time. We traded this in real time. What I said to the folks in the live room is if they start getting down in that 573 neighborhood, that's where we want to buy the market. They're going to try and recapture the bear pivot, if anything. And then they recaptured the bear pivot and kept going. And all we heard was order filled, profit, yada, yada, yada. We had just a bonanza in the live trading room today. Pause the video, read the notes, go back to the chart to double check the work. You could see, and there's your test of the bear pivot. We were long from lower, above the bear pivot, 575.90, the bull case for 578.70, which is a target and overhead resistance. Meaning, did we have traders shorting the pivot? Yes, we did. We go with a first time, best time. Here's where they hit it on the nose. You could see right here, the high in this candle was 578.71. The pullback was 576.97. That's almost 20 handles in the live room. We had long trades. We had short trades. We have what's called something for everybody. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. If you want to make money during the trading day, I suggest you give the live trading room a whirl. Pause them, read them, go back to the chart to double check the work. How many times do you have to see 571.20 in here to get the point that that's an important number? Next number down in the sequence. How you doing? Help a brother out. Post a comment under the video if you were a participant today, whether it was in the live room, inside the numbers. The question very simply is, did you make money today? Are you making money with me, with David Frost, My Strategic Forecast, inside the numbers, live room, lazy swing trader, automagical algo, the whole 9 yards? Is this a place where you can A, learn, B, make money? Help a brother out. I'm not the brothers. All the other traders out there are the brothers. Help a brother out. People looking for a place they can actually find success. Post a comment under the video. Do the right thing. Please. Don't forget about the list of markets we covered. If you're at all interested, you'll jot down some of these numbers and see how the market reacted around these numbers in these various markets. NASDAQ, small caps, semis, bonds, GDX, which is the gold miners, oil, gold itself, silver, natural gas, the dollar, Bitcoin, whatever you want. It's all here. We're taking a detour for a moment. We're looking at CSX Corporation. Why? Just throwing it out there as the next item up on the Lazy Swing Trader Automagical Algo system. It triggered today at $30.60. You can see how that was important once, not twice, but 3 times. It's a 3 times a lady. Traded away from it, finished up about 1% on the day. That's what we call a nice start to a new position. How did the market know $30.60? And why didn't it go down all day like the rest of the tape? Because this is the Lazy Swing Trader Automagical Algo system. These numbers are important. They don't all work every single time, every single day, every single number, but by and large, the numbers work. Don't chase it. Don't buy it now. It's too late. $30.60 was the entry. Crazy thing is, we have some traders that play these with options. They're already up pretty nicely in one day. How you doing? Just wanted to point it out. Not for nothing. Here's an interesting scenario. We're looking at the small caps over in Camp IWM, my favorite market leading indicator. Not, capital N-O-T, not a new low today. Interesting information. You look at the spiders to compare and contrast. They did make a new low today. So which market is going to be right? Is this buoyant, as they say in the trading parlance? Is this a tell? Are the small caps trying to tell us something by not making a new low? Time will tell. I still think we're on a collision course for late next week, either way. But for today, we take the market at face value. It's interesting information. There's been no material change on the chart. Whether you look at the daily chart or the weekly chart, headed into the convergence of these moving averages, I think that's a fait accompli, if you will. It's not a guarantee. It just seems like a guarantee. There are no guarantees in the market. 100, 200 period moving average, big time breakup candle low, big fat round number at 200. Seems to me, and once again, for the third time I'm talking about this, that smells like, feels like a full stack situation. I would write that down, put it on a sticky note. Let's go over to Team Transports, my second favorite market leading indicator, but a number one canary in the coal mine. Today, not making a new low again, just like the IWM, making higher lows. Quite interesting information. The IWM today was on par, meaning down with, on par, the S&P 500. However, the transports, which is potential canary in the coal mine, second favorite market leading indicator, a number one canary in the coal mine, only down 0.4%, significantly less than the S&P, making higher lows. Interesting, of note, puzzle piece. We're putting it, as they say in the trading parlance, on the table. No material change on the weekly chart. Symmetry would have us down lower next week on that collision course. We'll see how that all pans out one day at a time. How about the Q people? They got smoked today, down $2 or 2.75%, $13.81, right into the number. Where'd that number come from? Came from magic. As you can see, it came up short, ripped it back up, came back to get the number. The number is important. Came back to get it today. This was the other day. The Qs did make a new low today. They didn't finish at a new low, but they did make a new low. So we have the makings of some divergences out here, don't we? Just putting it in perspective, weekly chart coming into, just short of so far, but coming into the weekly 50-period moving average. That's an important place. The financials into no man's land. Where's no man's land? Right here, where you get below this low here, and they get into no man's land where there's space. I call it white space in between the entrance to no man's land and a gap. This area is, generally speaking, and was today, a place for a bull-bear battle at a minimum from an intraday perspective. I've said this before, I'll say it again. Write that down, put it on a sticky note. I give you these little tidbits of areas that produce bounces, that are bull-bear battle places, that the market gets attracted to, that the market likes to bounce off of. You have to keep a running list of these things. This is what trading is made out of. And smash mouth, the Philadelphia Semiconductor Index did not, I repeat, not make a new low. They are far and gone on the daily chart from the moving averages, all of them. Downtrend on the daily chart, downtrend on the weekly chart. You can see it here. Breaking down, ing, down. Where will she find support? Around next week, late next week, around the tinfoil hat event? Well, here's what my eye gets drawn to. Big time weekly chart breakup candle low, coinciding with a 100-period moving average, and right around the area, give or take, of 200, a big fat round number. And what do you have? Repeat after me. You have the makings of what's called a full stack situation. How you doing? Now, the market's never perfect. It's not going to give you or hand you the perfect thing all the time. But when I zero in on something, I'm harping on something, we'll pay attention until the market does something else. So right now, I've zeroed in on what we're calling the collision course. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.